All right, guys and gals, it's about that time of day again here, folks. Back to work here this evening. It's Thursday evening. It's April the 16th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And as you can see, I got a lot to cover tonight in this video. Charts are ready in the background. We get some oil, some S&P, and of course, we'll grab some gold here. Got a lot to talk about on the charts. Got some ranges, got some breakouts, and we got some big news coming here around the corner tonight and tomorrow as we go into OPEX, the last few drops of this third week of the month of April. I'm going to check the calendar because I want to make sure you know what time to be at your desk tomorrow as well. So got a great video in store for you guys and gals tonight. Charts are prepped. Calendar is ready. Glad to see you're here with me as well. Before we jump into the video though, as always, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish here every evening during the week. Also, don't forget any questions. Drop those questions in the comment section below. And boy, oh boy, I really appreciate you tuning in every evening to watch this video. If you tune in every evening, hit that thumbs up button for me. Always appreciate you guys and gals showing the love on this video. Hit that thumbs up button if you love the video. Make sure you subscribe to this channel and drop those questions in the comment section below. I'll circle back and get them all answered once we finish up on the video tonight. Speaking of which, let's get this introduction out of the way. Time is ticking, right? Let's grab the calendar for tomorrow and let's get this video going here. Jumping into the Econo Day calendar. Tomorrow, of course, is Friday. It's not just your average Friday. Tomorrow, of course, is the third Friday of the month of April. It's also known as OPEX. We do anticipate to see increased volatility. We've been talking about this all week, right? We've known all week that as we go into Thursday and Friday, we anticipated more volatility, especially on the E-minis, right? The S&P, highly volatile today, and we see probably going to see more of that tomorrow as well. Now, of course, tomorrow is a Friday. Friday mornings always tell me early in, early out. You know, we usually trade on Fridays till about 10:45 a.m. And then you really got to have a good reason on a Friday morning to be taking trades after 11 o'clock Eastern time. Now, if you're in Europe, you're in Asia, you can get to this a lot earlier if you want to, but tomorrow morning and every morning we'll be in our trade room trading together from 8 o'clock. Usually it's till about 11:30, but again, tomorrow's a Friday, so 10:45, you want to check the pulse of the price action. Make sure things aren't going too slow and sluggish. Remember, what happens is towards the end of the morning on Friday, especially because tomorrow is OPEX, you're going to see professionals get out of there early. That'll leave a lot of whippiness in these markets as we go into lunch and, of course, on Friday afternoon. Now, you know the plan for tomorrow, early in, early out. We'll be in our trade room every morning, 8 o'clock. So we get about 8 o'clock till about 10:45 for the good stuff here tomorrow. You'll notice there's not a lot of news that's scheduled for tomorrow. That's because tomorrow, of course, is options expiration. End of the day tomorrow. Everyone's got to have their options positions, right, changed up. And that, of course, will affect the E-minis. Now, as we know here, we've been watching a couple key components here this week. First of all, the reopening of the U.S. economy and, of course, pending other economies around the globe. And we've been watching more headlines on these OPEC production cuts. Now, these are the two big known unknowns as we go into tomorrow's trading session. We're supposed to hear, it's about 5:10 Eastern time right now. We're supposed to hear from the U.S. President Trump at 6 p.m. Eastern time tonight. That's what I've been told. It might be a little bit later. It's probably not going to be any earlier than that. But as I'm recording this video tonight, we should be hearing from the U.S. President Trump talking about the reopening plans. Now, he just made mention here on Twitter that he is open to allowing each state to make their own decisions. But this is a big deal, right? Anytime we hear for more updates about this coronavirus, the markets are really waiting on that, and you could feel it today. You could feel it from the S&P going to a range. You could feel the oil waiting on more updates. So everybody's been kind of waiting and watching and waiting to see when we're going to get some updates on this reopening process. And supposedly, we're going to get an outline for that at 6 o'clock Eastern time. Now, what that does is it makes tomorrow a complete question mark at this point. Will the market be bullish? Will it be bearish off that news? I'm going to do my best tonight to give us some levels and some setups to watch, but be aware this overnight move could be dramatic. It could be rangy. It's very difficult to tell how they'll react, but that is a big known unknown that is kind of a black cloud hanging over these markets right now, and we'll see the charts here in a second. Tomorrow also, too, we have to be thinking about, we're going to be hearing more about the OPEC production cuts. Now, remember, about a week ago, last Sunday night, we heard about OPEC, right? Of course, Saudi Arabia, the U.S., and Russia, the OPEC plus, crew. They talked about that 20 million barrel per day cut. Remember, there's no disputing on whether or not they agreed to the cut. What we're still waiting to hear about is who's cheating. That's the next update we're going to get from OPEC. It's not going to be everything is rosy. Now, everyone's saying, yeah, we're all committed to that production cut. But I'll tell you right now, when it comes to paying the bills, nobody wants to cut their own production. And we should be hearing something soon as far as so-and-so is not following the rules. And that's when everything gets really exciting on crude oil once again. So we heard about the production agreement last weekend. Will this weekend be the time when things fall apart? Or do we hear about compliance and maybe the market rallies? This is another known unknown right now. I'd be lying to you if I said I know when we're going to hear more about that, but we are certainly listening in very closely. So we'll hear regarding the reopening here about 6 o'clock Eastern time tonight. That really, I think, is the biggest variable as we go into tomorrow's trading session. Early in, early out. Join me tomorrow in the trade room, and we'll do it together as we do every morning. Now, don't forget, guys, I'll put all the membership links. You got to be a member to come out and join the trade room tomorrow morning. We open up every morning at 8 a.m. Eastern time, Monday through Friday. I'll put all the registration information for you in the description of this YouTube video. So grab the link in the description, get registered for tomorrow morning's trading session, and I'll see you there bright and early at 8 o'clock Eastern time with all the members here at School of Trade. In the meantime, though, let's get these charts all ready to go here for tomorrow. I got some oil, as you can see. Got some S&P, just a little bit bullish there on the S&P, and a beautiful chart to talk about tonight on the gold. I'm going to jump first, though, into the S&P, though. I think everyone's probably got their eyes on the S&P right now. The day today, not a huge surprise. Everyone's kind of waiting on this announcement regarding the reopening. We expected to see a lot more volatility because of options expiration, and we definitely got that, right? The market rallied up, fell down, rallied up, fell down, and now it looks like the market is pretty optimistic about what they're going to hear out of the U.S. President Trump here at 6 p.m. Eastern time, or maybe a little bit later than that by the time he gets the announcement out. So it does look like the market is relatively bullish. What do we know? What do we know about this market right now? We know the market overall is relatively neutral. If I go out and kind of zoom out a little bit here, you can see big runs up, right? Big collapse back down, a little bit of run up there. So, overall, it's a relatively neutral market overall. Yeah, you could go out a little bit further and say, yeah, we're bullish. Okay. So I definitely think we got that little bit of a bullish tone overall. And then, of course, you see this bad boy, right? That breakout right there. You can't call this a bear market, right? There's no way to call this a bear market. So, if you only knew this much, right? If you only knew this much right now, you'd say, okay, we're pretty much, we're pretty neutral. But then you see, of course, this big breakout here, and you go, okay, we're definitely got a bullish momentum, right? Strong bull move. Now, anytime I see a strong bull move like this, I always expect to see another leg, right? Anytime we see a strong move like this, I expect to see another leg in the same direction. So we know the market was pretty much neutral all morning. So, trading range environment, market moves up, moves down, moves up, moves down. You can easily draw lower highs, higher lows, right? This gives me my trading range. It's a very wide range, which of course creates these very small little sell zones above and buy zones below. And, typically whenever I have a range like this, right, my job is to buy low using seller failures. My job is to sell high using buyer failures, buy low, sell high, and avoid the middle. But now, of course, we've got this big breakout. Now, there are two breakout patterns I always look for, and we talk about these quite a bit on this newsletter. One of them, of course, is a 1, 2, 3 breakout, where I like to mark up the highs, find my lows off that hidden channel, and buy the low of that hidden channel. We call those 1, 2, 3 breakouts. I'm never very comfortable just simply trading the actual breakout, because you never know how far it'll keep going. You know, sometimes these look very convincing, and then you buy way up top here and they pull way back, they stop you out, and they run without you. Very difficult to time the entries on those breakouts, because a lot of times these markets look very convincing when they break out going higher. So we know we're bullish. We know we have what looks to be like a breakout pattern here. One of my favorite breakouts is going to be that 1, 2, 3 breakout, pulling back off of that moving average, mark the high, mark the low, and buying off of that low. Another one of my favorite patterns is a 2-try breakout. Strong move up, shallow pullback now. This is what gives it away. Shallow pullback, doesn't pull back to the moving average. Higher high, once you got that higher high on price, and it's usually just a little bit higher. Usually just a little bit higher. Then it'll pull back, and that's where we can look for that 2-try trap pattern, right? So 1, 2, 3 breakout into a channel low, right? Or a 2-try trap. Now, I'm always trying to find some additional levels of support that I can use to buy those 2-try traps. Anytime I'm a buyer, I always want to buy off support. And of course, the variable, right? If you were selling, you'd always want to sell off resistance. So those are 2 breakout patterns I'm watching for. Now, like I said earlier, we got a bunch of big news coming here at 6 o'clock tonight. We may come in and see this thing start running up and go sideways up here. It's very important you remember where we are up here. 2846 is that big time high, right? You go back in time, you can say that's a big level, very big milestone. The only thing we have above that, seriously, is like 2,900. And then from there, it's like 3. There's not much. Remember, this is that big collapse back here. I can't even go back far enough on this darn chart, right? This is that big collapse back there, right, in the month of March. And so there's a bunch of levels way, way, way up close to that 3,000 area. But I'll tell you, if the market really likes what they hear out of the U.S. President Trump, it's very difficult to tell what this thing will do once he makes the announcement. I could easily see the markets pumping and dumping off of this move. So just make sure you don't chase after these things as they go. But what I want to make sure you're aware of, though, is this high, that 2846. We may just, if the market slams higher here, right, we may start going sideways up here. And so we may see this market start sitting sideways. If the market sits sideways like this, that's now a bull market into a trading range. What I'll do is, once I have the size of that range nailed down, I'll use that range size to find my level of support. Once I have my levels of support, now I can look for a pullback below the range. I can look for what we call seller failure patterns here coming off the moving average for that run back up. One of my favorite patterns in a range-bound market. So again, if we make a run going higher here, we start going sideways, we start getting choppy, double tops, double bottoms, right? Once we see that range, once we know the size of that range, we'll take the size of the range, find our range expansion support, and we'll buy off of that range expansion support. Now, keep in mind, oftentimes when a market runs up and goes into a range, real quickly here, oftentimes when markets run up and go into ranges, we end up getting these expanding triangles. So, we don't really know how big that range will be yet, but once we do have that more information now we can look for that breakdown, get that moving average coming over, get some bears coming in, right? Wait for those bears, try to sell that breakout pullback. Remember, if the market is a bull market into a range, that range becomes a big magnet. So when sellers try to sell that breakout pullback, they're sitting ducks. The odds are stacked firmly against them, and I can buy right into those stop losses with a very simple pattern called a failure pattern, right, off of that range low. So at this point, again, we've talked about the 1, 2, 3 breakout. into that hidden channel pullback. We've talked about that two try trap right on the way up, or if it slams higher here and goes sideways. And keep in mind too, it may go 1, 2, 3 and launch, right? So keep your eyes open for those hidden channels up here, and we'll buy off the low of those hidden channels. Now, don't forget, this stuff could get pretty busy here going into tomorrow's trading session as we finish up the week. That's why I always encourage you guys to get registered and come out and join me tomorrow morning at the opening bell and trade this stuff with me in the trade room. If you can't be there tomorrow morning though, the next best thing is to grab the free trading course. In the free trading course, I'll teach you all about my 4 favorite entry patterns: traps, failures, strength, pullbacks. You'll also learn my favorite trading strategy, the same trading strategy we use every morning in our trade room. Make sure you grab that free course in the upper right hand corner. And again, I'll make sure I put all the links from tonight's video in the description of this YouTube video. Now, how do we sell this market? Is it possible here right now for me to sell this thing? It definitely is. There's a couple scenarios you want to think about to be a seller right now. If we end up getting an announcement here, the buyers come back once, the buyers come back twice, crown reversal pattern, that would be pretty much the only reliable reversal pattern I would use. You can see a fantastic example of a crown reversal here. We run up, we pull back, we try again, trap high. You can see that crown reversal right there, right? That's the same exact pattern. Same pattern here as I'm talking about here. That would be the reversal pattern off the high. We call that a crown reversal. Another option would be, and this is where you got to watch out for that trend line here. Imagine now we pump up and we dump back down into that range. What you want to remember is that trend line's not going anywhere. So as we go up, if I get that, it'll probably be something like this, right? It'll be like a 1, 2, 3, right? It'll be a strong move off the moving average. If I get that run like this, I either need to get underneath that trend line and use it as resistance, which I call two-legged pullbacks. This would be a very dramatic example of one, right? But that trend line underneath, sell off the trend line, I call them two-legged pullbacks. This would be a very dramatic example of that, right? But that's what you would look for. Or the more precise entry on this would be, as we're making that run back down here, we talked about this earlier in the week. What's my favorite entry pattern when I'm trying to avoid selling into support? Traps. We go lower, shallow pullback, traps. We saw a great example of that today, right, on the marks talk about from last night's newsletter, right? We talked about that rising support in last night's newsletter. Traps are the most important thing once we get that turn, right? Once we get that turn. So for sellers, it's going to be a crown reversal. Remember, if you're going with reversal patterns, it's a quarter size position. It's a minimum 1 contract position. I never like to go full size position on reversals just because they're not as reliable. Keep the full-sized entries, right, the full-size positions to your best setups. When you find your best setups, and my definition, by the way, of the best setup, do we go with momentum? Do we incorporate a level of support or resistance? And can we get a good reward for the risk we have to take? That's what defines a good setup. This would go against momentum, so this would not fit the rules for an A-plus setup. So you want to go a little bit of a quarter size. Again, go half size, go quarter size, go 1 contract size if you want those reversals there. Or if we go up and then dump as we're going back down, I can't just sell it. It'll be too bullish. I'm going to wait for this market now to roll over, and then traps, right? Traps will be your key, or get underneath it and use it on the other side. All right, guys? And again, these traps, these two-legged pullbacks, I talk all about those in the free course linked up in the upper right-hand corner. Let's keep this party rolling here, though. Now we get a pretty good plan here for how to trade this S&P here tomorrow. How about some gold? Right, we'll save the oil here for the last one here tonight. Oil was a bit of a dog today, and everyone's waiting on OPEC right now. Now, let's grab a look at gold here right now. What do we know about gold? We know the market's range-bound. Right? We know we're range bound. Unlike the S&P, we're not getting that rocket ship type of breakout right now. We definitely do see a strong move down, that's for sure. Now, real quick though, what does a range tell me to do? Ranges tell me to buy low, sell high, and avoid the middle. Once I know where my range is, I know the size of my buy zone, the size of my sell zone, and I know exactly where to stay out of the middle. Like I mentioned before, I want to buy low, sell high, and avoid the middle. One of the easiest ways to do that is to use these triangles. Like I mentioned in last night's newsletter, whenever I see a range, I always like to use triangles. They just seem to be where the best entries and exits usually come. And today was a really good example of that on the gold. Now, you'll also notice the size of this triangle. It's getting pretty wide, isn't it? And because of that, we're getting a lot of momentum here now for the bears. What you've got to remember is momentum is really the most important detail of everything. Momentum tells me direction. Momentum tells me the type of entry pattern that I want to be using, whether it be a failure or a nested failure, for example. If you tune in every evening, watch that every evening, you know what I'm talking about there. But the most important thing, though, is we know where we are. We're down around the low of that range. I want to be a buyer up into that range here now. But man, oh man, that's a lot of bearishness, isn't it? That's a lot of bearishness now. So if I want to be a buyer off the low, and I see quite a bit of bears in this market right now, what do you think's the best thing me to do? I want to buy low here, but I'm worried about the bears. This is where you got to go in and anticipate. If I was a seller, where would I be thinking about getting short? Well, it'd probably be up around the high of a channel. And so what I've done is I've marked up these lows. I chose this low, by the way, because these two lows lined up perfectly, right? I could have used this low, but it just didn't fit as well. This one fits, I think, a lot better off the lows and off the highs here. So I want to be a buyer going back into the range. I have to anticipate with all that bearishness, though, again, because the range is getting wider, momentum starts to build. I have to anticipate now, though, these sellers, they're probably not going to give up without a fight, right? They're going to probably try at least once, at least twice, and then we can look for that buy going back up. And this is really kind of the core of my strategy here for the buy side tomorrow is we know we have a very strong move down. Okay, that usually tells me to look for what I call a nested failure pattern. And we talk about these quite a bit on the newsletter, right? If I have if I go back to the drawing board here, right? If I have my range here, and let's say, for example, it's a bull bias, right? It's bull bias to a range. I want to buy underneath the range. So what I'll do is I'll wait for the price to pop lower. I'll wait for these sellers to come in, and I'll simply wait for those bears to try to sell off the moving average. I mean, literally that simple. Once I see them commit, I never try to pick a bottom. I never try picking bottoms. You pick bottoms, you'll get a handful of you know what, right? It's not a very reliable strategy because a lot of times you buy that low and the market rolls over, stops you out, and then goes right back up again. So it's very difficult to time your entries picking the bottoms. What I do is I wait for that breakout, I wait for the breakout pullback, and simply just try to buy right into those stop losses. Now, sometimes the breakouts are much larger. And in those cases where the breakout, of course, really runs, and this could be an example like the triangle situation we're seeing right now on gold, now that momentum is no joke, right? Those bears are pretty strong. Now, it's not a breakout until they hold the pullback, as I always say, right? You got to hold the pullback. But that strength now tells me I probably now want to try for one, I want to try for two, and I want to get us going from there. I call these nested failures. And this is why I said earlier, momentum is so important to tell you what type of entry pattern you want to use on this. So at this point now, I can see a couple options here for the buyers. One option would be a nested failure now off of the top of that channel. Again, 2 tries for those bears, then we're buying the stops. Another option here would be, if I scroll forward a little bit here, another option would be we go back up into that range and we just simply wait now for price to pull back, right? And we're simply buying into stops of those sellers. So we could do that, right? Like these patterns over here, right? Small little breakouts. We can buy into stops as they go back up into that range. Or again, as we go lower here, I've already got one. I'm looking for a second one here off the top of that, right? Of that channel. Now, If I can get a trap low on this, that would be even better. I would want to make sure, though, they would close above the moving average, close above the top of that channel, though, on that signal candle, right? Got to be a pretty strong close there as they go lower, or it'll be a 1, a 2. Honestly, that would probably be the best out of all of them if you could use if you can use the top of that channel, right, as that level of support. So a couple variations here, right? 1, 2. Trap low, that's always a very reliable setup here, right? Again, that's going to get you in at the rock bottom price down there. Again, nice strong signal candle closing above the EMA, closing with the top of that channel. That'll be your signal for the buy going higher there. And of course, if we get above it, look for that pullback off the high of that. At this point, it's a support level at that point, right? You're buying off it there, right? So you got 1, you got 2 there. I'm trying to absorb momentum, let those sellers dig their own grave, and then trade right into those stop losses as we go back up into that range. Now remember too, as a buyer here, this may also swing back up into the range, right? We may go right back up into that range, and there may not be a lot of real entry setups, right? It may just shoot right back into the range. If that's the case, just wait patiently down here. Eventually, these buyers will run out of bullets. I can wait for the pullback, wait for that seller failure underneath, and buy underneath it, right? And you can see lots of examples of those patterns here under the range here already. Also, too, with this big triangle, that's a big triangle, this could really rip going higher here. So don't be afraid to grab this as a 1, 2, 3 reversal. If we get the 1, 2, 3 and it blows right through that range, remember, there's a big difference between up and into that range like this and 1, 2, 3 break, right? This would kind of kill, 2 birds with 1 stone. Not that I recommend doing that, right? In reality, not to be taken literally, but if you want to go 1, 2 here and it breaks higher now grab that right hidden channel, and there's your new. Basically, it's a 1, 2, 3 reversal into a hidden channel pullback. Where's my target? Pendulum swing, right? The amount of the move underneath the range, the amount of the move above the range, 1773 looks to be pretty easy there. So strong move up, moving average comes over, buyers come in, they jump off the EMA. That's a reversal. Mark up that, right? Mark up that high, find that low. We're buying off the low of that hidden channel. Target, of course, is up around those highs. Okay, so those are some really easy setups here we can watch for as we go back up now into that trading range. Now, what if we dig deeper here? If we go lower, sometimes these trend lines, they'll hold down here and the market will grind lower. Could I look for a crown reversal down here? You definitely could. So if we keep going lower, remember, we talked about this last night, there's a big area of support down here. So anything that runs lower here, you really got to be careful selling it. So let's just say, for example, we do make a run lower. We poke our heads back up. The moving average comes across. They try once. They go higher. They try twice. Remember, at this point now, momentum is still very bearish, and they're showing us that they dominate this market. If we keep going lower now, you still want to look for that nested failure. I would look for a crown reversal off that low, or they may also go bounce off that low here. Buyers may come ripping in 1, 2, 3, mark up that low. Mark up the high, find the low, buying off that low. Or you know what? Sometimes they V bottom off this, run up, shallow pullback, 2-try trap pattern, right? 2-try trap pattern. That's the same pattern I talked about on the S&P, right? With the S&P running higher, same pattern there we just talked about on the S&P. And again, I know I'm going relatively quickly through these. That's why I want, at the very least, grab that free course. That way, when I say failures or traps, right, or momentum, you know what I'm talking about, right? That way you're not flying blind with me here every evening on this newsletter. And again, the best place to be is with me tomorrow morning in the trade room as a member, so we can do it right along with me, right? You'll see every step of the process as we do it in real time. So We know how to be a buyer on this. How do we sell this market? One way to sell it, of course, is a breakout going lower. Remember, if you watched last night's newsletter, there's this big, I mean, it's almost laughable, right? How big that open space is down there. It's a lot like the S&P, right? There's these big chunks that are missing in this chart right now because of all these just huge moves we've seen, right? The S&P is the same thing. The S&P is that big move down, and that stuff can evaporate in a well, not in a millisecond, but in a couple minutes, right? A couple hours tomorrow morning, we could be down to that retest of that low here. All right. Now, with that said, how do we confirm this? Because I don't want to sell down here. You can't sell the low of this range here. We already have that strong move down. We've already got momentum on our side for the bears. If they can hold that pullback and run, now I've got the green light. Now I can mark up that new channel. I can find that more aggressive channel, and I can sell off of that high. Right? Again, what do we call these? We call these 1, 2, 3 breakouts into hidden channel pullbacks. Okay, again, I know it's very tempting to want to sell the first pullback, but being a trader is all about probabilities. We got to focus on putting ourselves in the most probable trades, skip all the others. I'd rather take no trades than take low probability setups, because you're just going to lose money in the long run by doing that. I wait for those breakdowns and then hit it hard off the top of that channel. There's also potential that news comes out here and the market dumps. If it really takes a tumble here, watch for that shallow pullback. It usually won't pull back to the moving average. That little lower low, and once you get the lower low, now shallow pullback, little lower low, trap high here. And as always, I'm always trying to find additional levels of resistance to sell off of. We know where they want to go. They want to go down to that low at 1670. We'll see if they can get the job done here. So I think we got this pretty covered. We got the buy side, the sell side. Just make sure you stay away from the middle. I know it's difficult, especially when the market rallies higher, but stay out of the middle, right? Remember to use those failure patterns, buying low and selling high. Gold, we're looking good here for tomorrow. How about some oil? I saved the best for last. Maybe I might be joking a little bit on that one. Oil was a little bit dull today. It was pretty quiet. We had one breakout failure this morning in the trade, and there's only one breakout pretty much the entire morning here on oil. But you'll notice what happened. They eventually wound up back inside that trading range. What do we know about oil right now? We know that no matter what people say, this is not a bull market. I don't care how low the price is. If I get one more email right now saying, "Is this a time to buy oil?" No, it's not. We are not bullish. We are not bullish right now. What did I say earlier? What are the three most important things to qualify an A-plus trade? Momentum, support and resistance, and a good setup. Are you going with momentum if you're buying right now? No, you are not. And that's the hard part right now, right? If you're buying oil right now for a long-term hold, you better get your garage ready for delivery of those tubs of oil, because you're going to be taking delivery on that and holding that. You better empty your swimming pool on that, because you're going to need to hold on to that for a long time. Now, obviously, I don't know what the future brings, right? This could spike tomorrow. I don't know. Nobody knows. Right? I mean, all I know right now is no, I do not believe it is the time to buy oil. It can't keep going low. Yes, it can. It can go any lower. It can go as low as it wants right now, especially if we hear tomorrow about Russia or Saudi Arabia or the U.S. They aren't adhering to this production cut. It will go lower, and it will go lower sharply, and this could be very painful for folks who are trying to pick these bottoms right now. So follow momentum. Momentum is bearish here right now on the oil. We really haven't changed much from last night's newsletter. We see that strong move down. We're sitting inside of that range right now. The market went up, and of course, we were trying to sell off of that high. Remember the plan from last night, right? We had that rising support trend line, and look what you got today. A bunch of traps, right? A bunch of traps going down, trap high, right? Going down, trap high. This is exactly the same type of scenario we anticipated in last night's newsletter. So if you're ready for that today, right? It wasn't pretty, but if you were ready for it today, right? You had some pretty good setups, right? Selling those traps above those highs. So we're back inside the range here. What do we do with a bear market with a range? We sell, and we sell above the range. We buy below the range. Once I know where my range is, I know where my sell zones are, my buy zones are. I'm always looking for ways to buy low and sell high in a range market. Now, obviously, with things being so bearish on oil right now, we've really got to be careful being a buyer off of this low. So let's talk about this. I got some momentum that's bearish. Stay out of the middle, buy the low. How do I sell this thing short right now? What are some options right now to sell short? Well, I really like this little hidden channel here. That channel looks to be a pretty good fit, as you can see, off of those highs and off of those lows. What I'd like to do is get up around those highs. We no longer have to worry about that trend line any longer, but I want to show you kind of what this is looking like right now. As I draw that trend line off, I think we might get lucky on this and be able to use that trend line. That same trend line that we talked about earlier in the week here, that same trend line can be used as resistance. What I'm looking for basically though is I want to get up around the high of that channel. I want to get these buyers now to come out, think this market now is breaking out, try to buy the pullback, and look for ways to sell into those stop losses. A very simple breakout, pullback, failure. I call them failure patterns in ranges. I wait for the market to go up. I wait for the breakout buyers to commit. I don't try to predict how far it'll go. That's a fool's game. That's a rookie mistake, right? Very unreliable, and we'll sell into it from there. Now, it's also worth mentioning too, we've got that big high up there at 2060. Let's just say, for example, we really rip and we go all the way back up to retest that pendulum swing high at 2060. This would be a good example of where you'd want to use one of those nested failures where buyers try once, buyers try twice, right? Then we know everybody's in, and then we can sell from there, right? It's a good example there. We know we're bearish right now. I find my level of resistance. I look for buyer failures off the high of that channel. If we really push, I look for one try, two try, then sell back down. And keep in mind too, a lot of times after you see these nested failures, you'll oftentimes see those little two try traps. Keep an eye out for those traps on the way back down into that trading range. So imagine now we jump up, the buyers try twice, we sell into those stops, take the first target, trail that stop, we see a shallow pullback, lower low. We don't want to sell too close to the range because you're going to get kicked out of that trade, and we sell traps up above that high. A nested failure into a two-try trap pattern. Again, you'll learn a lot more about these patterns in that free trading course, or again, get registered for tomorrow's trade room in the description of that YouTube video. Now, what if we jump and we hold? Breakout, right? What if we jump and we hold and we go? Remember, you got to hold the pullback there. Okay, I don't care how strong the break looks. I don't care how strong it looks. We see a lot of these times where it looks very strong. It looks very convincing. They try and it still ends up back in that range. So, again, you can't trust how the strength of it is or momentum divergence, right? A lot of folks will say, okay, well, that's a lower high and this is a higher low, and okay, there's divergence there. Okay, no, it's very unreliable. It's not reliable enough for me to be trading it. I want to see a 1, a pull back, a 2, show me proof. Show me you really want this. Once you get that proof, now we know we can trust you. Now move, right? Now mark the high. And again, on these original breakouts, I like to look at the big low and draw off that low. That usually gives you just a little bit more of an advantage because you can get a deeper pullback and it really works well there. 1, 2, 3 reversal, 1, 2, 3 breakout, 1, 2, 3, and then into a hidden channel pullback. Okay, now I know sometimes they rip and they keep going, right? If this one was to keep going higher here, right, it would be obviously, you wouldn't be able to call it a range anymore. So if they do keep ripping higher, right, if it does keep ripping higher, that shallow pullback will come in. Get your colors straight here, Joe. That shallow pullback will come in. Remember, that's the trick. Shallow pullback, higher high, trap low, bingo. And again, try to find that hidden channel to incorporate off of that low. Now, where is my objective? Where's my goal if we do go higher here? The goal is 22. 22 is where they want to go. Remember, that is kind of the underbelly. It seems like forever ago, but it was just a few days ago, right? We start off the week there. It's ultimately my short-term target is 22, right at that low. If I have an extra bolt in the gun, though, we'll leave the runner up. Ideally is that 23.19, but, we'll see how far it goes. As of right now, 22 looks like a pretty juicy objective, though. If they really get this thing cooking, 23, that'd be a pretty big move tomorrow. That would be. It'd be over $3. So, we very typically see, we almost always see a $1 move. We very oftentimes see a $2 move, but we don't see $3, $4 moves very often, right? So if we're looking at a, 1975, that's a big move, right? Again, totally possible, but not very probable. So be more realistic with it. 2203 looks to be a more realistic target as we go higher here. Now, how do we trade lower? As we go lower, and I've warned us about selling into these lows here many times. There's a lot of perception that this is a good place to be a buyer. It is. There's a lot of people. I talk to people all the time in trading, and one of the first questions that they ask about oil is so should I buy it at 20 and hold on to it for a long time? I mean, it can't go lower, right? And that's what I say. Yes, it can go lower. I have the blown accounts to prove how flawed, right, that strategy is. But we definitely know, though, there's a lot of support down here. So how do we get through that support? We need a breakout pattern. I need a strong move down. I know I've got that pendulum swing down here. I want to see him hold that pullback and show me some strength. And I know it's kind of a wimpy way to trade breakouts, but I'm here for reliability. I want to sleep at night, right? I want to have that reliable return on my time. I'm not trying to get lucky. I don't want to get lucky to make money. I want to make money making it a methodical, almost boring way of doing it. You almost want your trading to be so mechanical that it's boring. I know it sounds bad because, we think about trading, we think about go, 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 excitement, but that really happens mostly in the movies. In real traders' mindsets, it's slow and steady. Where's the most reliable trade here? I'm not going to be trying to sell into that. I realize it's very tempting here. What I'd rather do is, if I see that strong move down here, I'm more tempted to grab a crown reversal, right? Bears try once, bears try twice, trap low, grab a crown reversal off that low. Right? That's what's more tempting here than to be a seller off that into that low here. But again, I digress. Strong move down, pull back to the moving average, strong move through. Okay, now we can talk. Now I can mark up that low. I always like to grab those hidden channels again and then sell off the high of that hidden channel. Just be very careful trying to chase these things as they go lower, because I do think you're going to have a lot of people who are going to make that, albeit very flawed thought, I got to buy down here because it can't go any lower. We all understand it's flawed thinking, but at the same time, though, it doesn't mean people won't do it. And so you've really got to be careful being a seller into these lows right now. So wait for that breakout pullback. Wait for that 1, 2, 3 breakout. Look for those 2 try breakouts, right? And we'll trade the breakouts from there. Now, don't forget, guys, tomorrow is going to be a great session in our trade room. It could be a bloody mess tomorrow. Let's be honest. Tomorrow could easily be a bloody mess. It could be a really, really good session, though, as well. It's a Friday morning. I want to see you there with me tomorrow as well. Everyone's waiting to hear what they're going to talk about tonight in this press conference regarding the reopening of the economy. Will the market pump and dump? Will it pump and run? Will we get chopped up inside of ranges tomorrow? No matter what happens, I'll see you there right there with me tomorrow and every morning as an advanced member. Once again, I'll put all the membership information for you guys in the description of this YouTube video. I'll also put a big blue button for you to get registered if you're on our trading blog. Don't be afraid to use that live support tool to give me a ring here in the office. Don't be afraid to call that telephone phone number, right? Call that number. I'll be more than happy to walk you through the entire registration process. And as always, guys, if membership isn't quite right for you right now, at the very least, grab the free course. It's part of the free trial. Learn the patterns, learn the strategy, and maximize our time together every evening on this newsletter. Guys and gals, signing off here on the week for the newsletter. I'll be back on Monday night for our next newsletter. In the meantime, time. Trade well tomorrow. Follow those rules, right? Momentum, pattern, signal, and I'll see you guys next time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time, guys and gals. Adios, amigos. Bye-bye for now.